Welcome to the Asia Climate Finance Podcast, where our host and expert guests delve into and scrutinise the pressing issues and emerging trends in climate business and climate finance. We greatly appreciate your support. Please like, review, and subscribe to the podcast to help us grow and reach a wider audience. Be sure to take note of the disclaimers at the conclusion of each show. And now, here is your host, investor, analyst, and author, Joseph Jacobelli.
Good morning, good afternoon, and good evening, wherever you may be listening from. Welcome to episode 68 of the Asia Climate Finance Podcast. In this episode, I sit down with Toby Chan, co-founder of venture capital firm Audacy. Toby has over 2 decades of experience in investment banking, private equity, and venture capital, and has specialized in energy infrastructure and natural resources. We have a deep dive into the shifting world of venture capital and climate tech across the Asia-Pacific region. The conversation travels through investment strategies, the evolution of energy transition finance, and how pioneering solutions are overcoming policy and market hurdles. Expect an insider's view of trends, challenges, and success stories shaping the Asia-Pacific path to net zero. Please do contact us for ideas on themes, guests, or just some comments. The email address is in the show notes. I really hope you enjoy this very interesting conversation. Hey, Toby, welcome to the Asia Climate Finance Podcast. Really happy to have you. I know you've been traveling around quite a bit, so I'm glad that caught you. How's everything? How's Hong Kong doing?
Hong Kong is spent some time in the southern hemisphere, had the cool winter breeze for a little while, and back to Hong Kong, hot and humid weather. But I knew that I skipped a lot of black rain events when I was away, so I'm glad to return to better weather.
The frequency now of these one in a lifetime weather events in Hong Kong, once you get it 3 or 4 times in the summer, it's a little bit crazy. But anyway, once again, thank you very, very much for making the time to chat about venture capital in general in Asia, what's going on, all the trends. I really appreciate your time.
No, thank you for having me.
So, Toby, we've got your bio in the show notes, but could you just tell me a little bit more about yourself from your own perspective, in terms, especially a little bit about your background, and then how did you kind of get into climate tech and the energy transition in Asia in general?
Sure. So, firstly, pretty much my whole career of 20 odd years has been in the energy and infrastructure space. Initially with Macquarie Capital in Sydney, where I grew up, but did a lot of work in the traditional energy and transportation infrastructure space. And back then I started seeing the first solar and wind sort of lookalike projects. It wasn't even called renewables then. But then I moved back to Asia about 16 years ago, when Macquarie was expanding in Asia. Was also curious about China, so did a number of M&A transactions there. And then I joined the buy side as a founding team member of an energy specialist PE firm called Kerogen Capital. Helped them raise the first couple of funds, and they're now a $2 billion US platform. And I was like searching what's the next thing. I took a career break. And then after that led to co-founding of Audacy in 2017.
Right. Tell us a little bit about what Audacy is, because you could just describe it's a venture capital firm based in Hong Kong, looking at Asia, climate tech. But I think there's a little bit more to that. So maybe just tell us a little bit more about the company.
Yeah. So get on with what the current focus is now. We are an early growth investor specialized in climate tech solutions in APAC that are ready for commercialization and scale up, mainly across 3 thematics: in energy efficiency, transportation, and industrial decarbonization. And we work with and co-invest alongside with many corporates and strategics in the region to facilitate that scale up process. But the history is really a joint effort between sort of a highly specialized investment team in the energy and industrial space, but supported by the drive from the next generation of my co-founder's family office to invest more sustainably. And the first couple of years in 2018-19, we invested more in the traditional distributed renewable space back then, where there were still some attractive opportunities. But since 2020, the pivot or the focus has been increasingly more on the technology side and to what is now sort of the climate tech strategy.
Just because we mentioned climate tech quite a few times, before I ask you a little bit broader questions about the markets and before we get into climate tech, could you just quickly define what climate tech actually is?
Yeah, I know that is a concept or an outcome rather than any specific industry. And and in Asia, we constantly need to sort of educate people more about what it is. I think in the West is definitely more understood and mature.
Right.
But a lot of the solutions is helping various industrial processes to become more efficient. People think of like EV as an example, is to make the auto industry more efficient. The electrical motors are much more efficient than fossil fuel based, right? So, and then there's what about other forms of transportation like aviation, shipping, heavy industries, or lower carbon materials in the built environment. So it's really encompasses various types of industrial solution to enable a lower carbon economy, but whilst at the same time, hopefully saving costs as a result once these solutions scale.
Right. And I think that later on we're going to go on with a couple of examples to put a little bit of color, but let's go back to the big picture first, if I could. So we're trying to understand, or at least I try, and I think many other people try to understand a little bit about capital flows in the energy transition related projects and solutions, and I'm making as wide as I possibly can in terms of definition. What's the state based on your discussions with investors? And I know that you are focused on a portion of that, which is the VC market, but I'm sure you're also aware of the broader trends, because there's a lot of misunderstandings, I think, out there saying, well, there's not enough money. We need to find financing solutions. We need to find finance, and we need to find financing solutions. What's your opinion on that? And what are the general kind of capital flows that you're seeing in terms of funding and financing energy transition related projects and solutions in the Asia Pacific region in general? Where's the market?
Yeah, as I mentioned, my previous background had been involved with on the infrastructure side and in private equity as well, so I'm pretty familiar with what they're up to. So the state of play, in my opinion, is yes, we have infrastructure as an asset class that's been growing and booming, right? So you have a lot of established infrastructure funds, not only the Macquaries, the KKRs, the Stonepeaks, and even more newly established ones that are investing in very established technologies, solar, wind, but they are going to complementary technologies like batteries, etc. But many are actually that raised big pools of capital before have seen those established asset classes, the returns are normalizing. So they have to explore a little bit, either go earlier stage or invest in platforms, or some funds are willing to take more nascent technologies. Then you have the PE funds that are also quite large, but not as large as the infrastructure funds that have been looking at later stage growth rounds, but there are actually not that many around since the EV wave has passed a few years ago. So, and then on the other end of the spectrum, you have traditional VC firms that the traditional model is you invest in a big portfolio of, what I call like bets, and they're really focused on the seed stage, a little bit of a spade prey approach. And I think that's where we differentiate, and there's not enough capital to support sort of more mature technologies, but they are at the earlier stage of commercialization where they're not in the position to raise those huge rounds for the later stage PE funds, not at that infrastructure stage yet, but need that scale up sort of capital. So that's why we're focusing there. We think that's where a significant gap in that series sort of C to B round. And we also think that it provides a good sort of risk-adjusted returns for investors.
Right. So in summary, or if I can paraphrase it in my usual very bad way, which is on the private equity side, lots of capital available. Identifying projects is challenging because we can talk about that separately. Secondly, on the VC front, it really depends on which portion of the markets you're talking about. But in terms, I mean, your sense is that in general, the funding and financing is not really a major stumbling block or hurdle for the growth of the energy transition in Asia.
Yes, I think we need just more successful case studies. We need more, I guess, yes, policy support to catalyze that capital, but it is there. And also a lot of private investors are sitting on a lot of capital, just waiting for the right opportunities to deploy. So,
right. One capital related question before we get on to talking about climate tech specifically. There's been, let's call it a anti-clean energy wave in the US recently. Kind of started late last year and it got accelerated in the last 6 months. So given the recent pullbacks in the US, is that an opportunity for Asia in terms of both technologies as well as capital flows?
I definitely agree that is the case, because for the longest time, US is seen just as a very healthy or attractive ground for scale up and commercialization. Of course, the IRA has also helped accelerate things in the last few years, but with a lot of those being pulled back and increased uncertainty, not just about now, but what's going to happen in the next few years. Like the big beautiful bill is just one thing, but it's just the uncertainty makes people a bit more skeptical, and then people realize in Asia, actually, we have the supply chain here, we have a very good manufacturing skill set for scale ups, and actually different countries, regulatory bodies are increasingly supportive of the theme and saying we're going to become leaders in the clean tech space. Not only China, but other regional economies are looking to sort of have a longer term vision and see this as a strategic area to invest more in.
And are you already seeing some kind of hints of capital flows or people developing technologies preferring Asia, to some extent Europe, rather than the US because of all the uncertainty being generated in the US?
Yes, I wouldn't say necessarily prefer, but they're definitely more open to explore, or they would try and hedge the risk and run things in parallel. And I'm also seeing capital allocators, like previously throughout our discussions with other investors, they will only look at US focused funds, or at least US centric, US plus Europe. Now they're definitely more open to seeding deals and managers in Asia Pacific as well, just to at least diversify the portfolio a little bit given the increased uncertainty.
Right. So moving on to climate tech, what's the biggest misconception that the investors you talk to or investors in general still have about climate tech globally? I mean, that's in general. And then is there kind of slightly different view or even more of a misconception in the Asia Pacific region?
Yeah, I think as we mentioned before, one is in Asia particular, what climate tech is, which we talked about. But the other common misconceptions is if anything that's cleaner will necessarily be more expensive. They still see this as concessionary capital or philanthropic. They still require more convincing in education that, this is actually, particularly with the right solutions, it helps enterprises save costs. It increases your margins, and therefore, actually, it is not concessionary. The more impact that we can make, actually, the climate tech business or a portfolio company should actually be more profitable. And then the other thing that we have to sort of counter, but in some cases, issues are these businesses take 20 years to scale. They're really, really capex heavy, so far away from commercialization. But in reality, we see actually a lot of solutions where the technology is already quite mature, has been developed within research institutions for a long time, or the founders have bootstrapped very efficiently, where even an early growth company is already 10 years old. And so it doesn't take another 10 plus years to actually have an exit or have a positive outcome.
We talked before a little bit about climate tech, you and I, Toby, and you were kind of arguing that climate tech investing is actually giving rise to a new infrastructure asset class. Could you talk a little bit more about that, please?
Yeah, so we know from various sources out there that to facilitate the energy transitions, we need to invest annually trillions and trillions of dollars in this space, right? Yes, we have cracked wind and solar or other asset classes like this, but we can't actually deploy these trillions of dollars until we actually have technology or improve the technology to make these sort of infrastructure or the rollout of these infrastructure like viable. As I mentioned, we have a lot of established infrastructure asset funds or investors out there that are waiting for, say, for example, just one of our portfolio companies in the sustainable aviation fuel space. The whole industry is still relatively early. You have some plants that are scaled up using established technology pathways like HEFA, but there are other methods of producing SAF that are technology mature, but you cannot deploy. They're at the cusp of having the first few commercial infrastructure facilities, but they're sort of in the order of a couple of $100 million. But once you see successful case studies, examples of that, then people say, this is an established technology. Then people would want to do the same, sort of use the same technology in different parts of the world. And same with other asset classes like waste to energy, for example, in the municipal solid waste, we do that. And similar to a lot of the other solutions that we look at.
Toby, how do you balance climate impact with financial returns, especially in early stage investment? I mean, that's a very broad question, but just from your perspective, how do you look at that?
From Audacy's standpoint, we don't believe there's necessarily a trade-off. So we are seeking solutions that are scalable, therefore creating the impact. And if that happens, then sort of the financial returns will come. I think our balancing is, okay, there are a lot of earlier stage investment opportunities where the technology is less mature. And then in some cases, maybe philanthropic capital or government grant money or subsidies would be in a better place to fund such technologies at that stage. But where we're investing in, we believe in most cases, the interests are actually aligned. But as I mentioned earlier, yes, there are other solutions that takes a longer commercialization timeline with huge potential impact. But then you have other sort of investors that are more set up for those types of investments.
Again, sticking to climate tech, which climate tech verticals are most sought after right now? And which ones do you think may be undervalued?
Yeah. Well, I think we can go through like by a process of elimination, or what's happening in the market recently is what's given the scarcity of capital or certain pullbacks is what's gone out of favor are those solutions that have longer commercialization timelines, and the commercialization environment is less certain. So I'll say those that are less attractive now with like the direct air capture solutions, more bio-based solutions where the scale-up process is more difficult. Hydrogen has experienced a pullback because the infrastructure is not ready. Just anything that tends to be more capex heavy, but the commercialization timeline is still a bit far. So on the contrary, where investors are still more amenable to at least assess opportunities is where the commercialization market is perceived to be more certain. We all know, for example, there's a big AI data center boom, and that means grid infrastructure needs to be upgraded. There'll be more needs for cooling technologies. They might need to have power generation on site. So the solutions that are tangential, for example, to that mega trend is seen as more in favor by investors because they just feel like the commercialization market is more certain. I'll also say we ourselves are also looking at less policy dependent solutions, such as in the built environment, more efficient heating, cooling system, HVAC. We hadn't made an investment in that space, but we are looking at it more seriously. And then also other waste to energy solutions, reutilizing industrial waste heat, because the input is waste and very low cost, and you can sort of that degree of circularity, that's pretty attractive. And other particular thematics could be there are actually a lot of bridging opportunities out there that from a valuation perspective are quite attractive because the fundraising environment has been slow recently. So a lot of companies needing to do extension rounds. Some of those could be quite attractive. As I mentioned, there are also like early stage infrastructure development opportunities that not a lot of investors, early stage investors, understand because they just don't come from an infrastructure background. Yeah. So I'd say some of those that I mentioned.
That's great. Maybe just going back to Audacy to put a little bit of color, Toby, on what we're talking about. Do you think that you could talk about 2 or 3 of your investments, whether they're current or past investments, so as to give a little bit of color of what it is that we're talking about in terms of company profiles, where they're coming from, perhaps what kind of size of funding we're talking about? Maybe just two or 3 examples to put a little bit of color in the picture.
Sure. So I'll give an example. In the maritime space, we made an investment in a company called Xfuel, and their core technology platform is a chemical refining technology. And one of the first use case is to recycle marine oil sludge, which is the dirty oil that comes from industrial shipping, and able to recycle that into clean shipping fuel in a very energy and cost efficient process. So the technology has been, as I mentioned, been developed by the founding team for around 10 years already. It has gotten it from inside a lab to early stage pilot, and it's just, we invested just when the fundings is used to do the first commercial facility in Europe. And for us coming in, we know the shipping space quite well in APAC. Also, one of our advisory board members was very experienced shipping exec, had experience in Maersk. And we've been able to sort of connect the company with sort of sludge collectors in places like Singapore, which is a major shipping hub, and trying to land the technologies in major shipping hubs in Asia.
Interesting.
And
Do you have maybe one more example to just put a little bit more color?
yeah, so we also invested in the aviation space, a company called Jet Zero Australia. Currently, they're developing the first commercial project in Australia. The technology pathway is called alcohol to jet. So they're using agricultural waste, the energy content from that to create jet fuel. So again, it's on the cusp of commercialization. We've been supporting them since the end of 2022 from the Series A. We also made a follow-on investment in the Series B last year alongside Qantas, Airbus, and a Japanese strategic energy company called Idemitsu. And they're already progressing to the Series C. And hopefully, like early next year, it'll get to that sort of final investment decision stage to put in the big capex. The capex for this first project will be somewhere between the $500 to $1 billion. So that's where we're already having conversations with infrastructure investors that would like to come in at that stage already.
Right. That sounds pretty massive, actually.
Yeah, and that's just the first one. It's really a development platform for a series. When we initially invested, it was one anchor project, but since then, there's a second project in Australia that is at least twice as big, and we're also helping them with business development opportunities in other Asian countries, such as Thailand, where there's a lot of sugarcane waste. They also have business opportunities in Brazil, where there's also a big sugar industry there, and the waste has been underutilized. So it's really becoming a more and more international platform.
That's great. I think these maritime and aviation examples are really great. Looking a little bit at the outlook now, if I could, Toby, two questions on that front. One is a more kind of hot topic. The Asia Climate Finance podcast is not focused on the latest hot topic because we're looking more at the long-term trends. But I think one hot topic, which is a long-term trend as well, is this gold rush to AI, which is very hot for many investors right now, but not realizing energy is a huge part of the required solution, data centers especially, backup power, the energy storage, cooling technologies, etc. What are your thoughts on that?
I think it's great that that thematic is getting more attention to these type of solutions and realizing that infrastructure like the grid has been underinvested for a long time. So it's shining a light on those groups of technologies. But the outlook for other types of solutions is, I think it's going to be a bit tough for the next couple of years. We just need more successful sort of case studies of technologies crossing that scale-up phase and to become more mainstream, and other investors say, this is no longer a new technology. It's been proven by first a couple of commercial facilities, like I mentioned in the SAF space, because a lot of investors are sitting back and waiting to see these new solutions being commercialized and scaled up. And then I think hopefully that would open the wallets of the bigger investors.
But the scaling up, for example, if we look at green hydrogen, which in the last, I guess, 20, 30 years has gone from hot to cold, hot to cold, from hot to cold, and now we're in a kind of lukewarm situation with hydrogen. I mean, my basic non-technical understanding, because I'm a stupid finance guy, is that you just need to scale it up. And once you scale it up, that's how you bring down the cost. And that's how you make it more commercially available. And there's a lot of stuff in that space happening in Australia. Last podcast, episode 67, we had Nick Smith, who's an expert in that particular side of things. So in terms of scaling up, is it really what you're talking about? So the technology is there, but you just need to have China-style size investments to scale up the projects so that the technology can be more viable commercially?
Yeah, oftentimes, or at least in some cases, there's a lot of sort of chicken and egg like issues. Like for example,
Right.
in the hydrogen space, as you mentioned, right? Like so, for investors to put in that heavy capex, okay, where's the offtake coming from? Like a lot of corporate customers willing or not at the stage of making binding or very solid commercial agreements that the infrastructure investors can rely on because they don't know
Right.
whether, yes. So I think in those instances, that's where policy can step up and either facilitate putting their credit behind some of those offtake discussions or provide more first of a kind types financing or at least reduce able to de-risk the project a little bit more to make it more appetizing for investors.
Understood. One very final question, Toby, if I could. You have to take your crystal ball out of your desk, the dusty one, and share a little bit about what you're thinking in terms of the next, and then knowing that the energy transition is a long-term game, not a short-term game. But over the next 10, 20 years, where do you see financing going? Where do you see funding going for energy transition related projects and solutions on maybe the VC side or any other aspects that you want to talk about?
Hopefully, and I'm seeing signs of that, which is positive, is the different parties are coming closer and meeting in the middle to plug some of those financing gaps, right? So, for example, I mentioned in the sustainable aviation fuel space, right? There are some investors, and Brookfield, that have at least made public announcements that they're willing to invest in less proven solutions, such as in the ESAF space, and really seeing there are solid mandates in that space, especially in Europe, where they're binding, at least at this moment, quotas and mandates. So I'm going to make a long-term commitment to putting capital in that direction, even though the solution is technically less mature. And so you see some of the, what we said, the later stage investors are starting to come in earlier. Other investors are willing to take more. A lot of these technologies is not entirely new. Like parts of it may be less proven, but a lot of the combinations of the technologies have been proven before. So hopefully we see investors being more cognizant of actually just because it's a new thing. It's not technically new. Like all will come together and realize that the risk is worth the potential returns, and then these other solutions will hopefully follow in the footsteps of EVs becoming mainstream, like hopefully in the aviation and other transportation sectors, and other types of newer infrastructure investors will actually get rolled out successfully. But there's no doubt that it's going to take a lot of effort and time and a lot of conversations to how to collaborate and make that happen.
You said there's a lot of parties that have to come together. What about the role of banks? I mean, commercial banks or multilateral development banks who are by nature very, very conservative. So if you tell them we've got this technology that needs to be scaled up and it's going to make lots of money 5 years from now, they're going to go, okay, we'll see you 6 years from now. But do you see that some of these banks are starting to at least trying to understand what's going on and looking at the opportunities and perhaps to be one of the early participants in this, whether it's commercial banks or multilateral development banks?
Yes. I've seen some commercial banks and answer for multilateral that are a little bit more progressive and seeing that this is a real opportunity, but they tend to be, hey, not the first tier, the biggest, right? It's the more up and coming, the second tier, or people that really want to make a name of their brand out there to be seen as, and it's a long-term strategic decision by management who has a longer term vision. And hopefully with, as I mentioned, with what usually tends to happen is that very few players want to be the first or the second, but once you have that, then the floodgates open. Hopefully we can see that happening.
It kind of defeats the purpose of the concept of being a first mover advantage, right? They want to be the second or third mover.
Yes.
Well, listen, Toby, I really, really appreciate the time. I really enjoyed the conversation. I hope we can visit this topic again, climate tech, again, perhaps next year and see where we're at and see the developments. Once again, I really appreciate your time.
Thank you very much for having us again. And we're very appreciative of the opportunity to tell our story, and hopefully more investors or industry participants can work together to facilitate the energy transition, particularly in the APAC region where it's like very, very needed.
Agreed. Thank you again, Toby. Thank you.
Okay, thank you. Bye-bye.
Thank you for listening to this episode of the Asia Climate Finance Podcast. Please be advised that this podcast is presented for educational purposes only. None of the information provided should be construed in any way as investment advice. Always consult with a licensed investment professional before making any investment decisions. Additionally, please note that the views and opinions expressed by our guests are personal and may not reflect the views and opinions of their current or previous employers.